Hey, best people, it's the Crypto Sniper. Yes, it's the Crypto Sniper coming at you. Glad to be with you, glad to be with you, glad to be with you. What a great period it has been for crypto. Bitcoin and Ethereum, the majors dominating. Bitcoin dominance really rocketed. We're going to cover a bunch in this video. Let's get into what we're going to cover for you today. Bitcoin, why you have the first time a technical target of a number well beyond 100,000. I am going to be talking to you why we have a technical target now, increasing its probabilities of setting up at 145,888. 3 eights, yes, 3 fat ladies. It's going to be lucky for that China woman, all 3 of them. They're going to be wiggling and dancing 145,888. So we're going to talk about that, Bitcoin. We're going to touch on Ethereum as well, which is going to be also exceedingly interesting. We're going to do a cross analysis on gold and another currency apart from the dollar, and tell you why, in our opinion, Ethereum is actually in a first upside HVF, high volatility funnel, to a higher plane of great value. We'll be touching on where that goes, and we'll be looking at it across not just the euro, but also gold as well, and highlighting that. Then also you're going to see a run and a drive-by on the XRP, which has been underperforming and draining dominance while the honey badger has run of Bitcoin and Ethereum. And we're going to talk about why you are still on track. And in fact, we're going to show you a very interesting chart, an inverted chart. Also, cross analysis one, not on one you've seen before, not the USD. So we're going to invert the chart and we're going to show you XRP against another major currency. And we're going to show you why it's going to be targeting for the upper 16s, probably crossing into the 17s when its moment comes, and that its moment will come, and that you're not to be giving up on it. Yes, I'm also invested in XRP. I would have preferred it all to have been Bitcoin for the beginning part, but hey, we got to put on Bitcoin leverage trades and had a great week starting last week into the Thursday, Friday period, into the triggering event of gold on Sunday that really pushed the cryptos higher. The gold and precious metals got a bit of a slap back, but the cryptos have continued to run. Interesting. Anti-fiats, physical ones get smacked down, digital ones get allowed to run. I have a feeling they want you all in the digital world. Anyway, we'll come back to that and other interesting theories. Yes, theories. The madman and his tinfoil hat and all his theories. Whoa. Yes, you're going to have that. And then ADA, some good news for ADA and where it's going and why it is approaching a similar technical setup that sees us see some good news for the ever-patient ADA fans that have had to suffer Solana. Absolutely riveting. That is a status token. Of all the status tokens, there's going to be some form of announcement. The insiders are wailing into Solana, wailing into Solana. There's something coming on that baby. I tell you, money don't lie. The money don't lie. But the ADA fans, I've got some good news for you. Many of them are always like, we're so much better than Solana. Why does Solana even exist now? Solana have a higher market cap by some way. So we'll be touching on Charlie Boy's token as well. So there's quite a bit in that. I think we should get started. Let's go to the charts. Whoop! Okay, here he comes. Bitcoin. Yes, the boss market of the crypto markets, the god market of the crypto markets, talking to you. Yes, coming from sunny South Africa. Oh, beautiful, looking out over mountains, vineyards, and many things. Swimming in the salt sea water this morning, watching the sun come up, the birthing of a new day, getting that natural light into the back of your eyes, mitochondria being stimulated, natural hormones being cycled, circadian rhythm. Yes, that's your health update. Now with the charts. Let's get to it. Bitcoin. So a couple of seminal inversion, reversal to the downside bear market events occurred 2 or 3 years ago, and we need to revise them, why these levels are key. So number one, we ran that target of 40.5 with an impulsive break. That was the inverted head and shoulder. We've covered this countless times, but some people might be seeing this for the first, so I'm not going to overstay my welcome on that point. That is that. Okay, that has been run. We've also run the next key level that we suggested, that was 42.5. that's been run. We're on quite a big time frame. I've chosen 4 days. It's eccentric. I'm eccentric, but there's a reason we want a pattern view. I wanted a certain amount of price behavior under display here on the screen, and that turned out to be the number. Now, we've also gave in previous videos the next level of significance being 47.5, and being a kind, gentle soul, I kind of made the line super fat so that it would pop for you right now. And why is 47.5 a key interesting level? So that's 5 grand beyond the 42.5. We are now trading at the moment 43,769. So it's still some way short of 47.5. That's roughly $4,000 away, minus a couple of hundred. Okay, so why is the 47.5 even interesting to us, you ask? Well, it goes back to the original reversal, the first major reversal of Bitcoin in the last bull market. That was this complex head and shoulder. It looks like, you guessed it, Cape Town. Where is Francis right now? Talking about vineyards and sunny shines. He's not in the northern hemisphere where they have interesting fashion. Go watch our tweet as to why I say that. On the Northern Hemisphere winter collection, the global warming collection, like this Michelin man. Anyway, so this head and shoulder had a key interesting neckline. It was 42.5. We call that armpit 2. That was armpit 1 of our head and shoulder. That is it. Those are the key points. And you had a complex head with a little dip in it, and then you squeezed higher, and then you exhausted. You spilt to the armpit 2. You rallied, and then you got broadening, and then you smashed. That was a break, and it projected a target that was made to the downside. For simplicity, and on this chart I've chosen one that has a little bit less drawings and lines on it, but that target was indeed made. Let's draw the target. Let's draw the target. Okay, draw the target, Francis. You can't talk about a head and shoulders and not have the target drawn. Okay, but that the key point that I want you to take from that is that there was a very important neckline that occurred, and this was the first rejection reversal downside structure for Bitcoin. That's right. And it traded to the downside quite strongly as a result of that, but then rallied. Check that we're on log scale. Are we on log scale? We're on log scale. So that then subsequently rallied, and the rest was history. Went up to 69 after this falling wedge. In fact, our COT indicator that we were still running and dealing with over there was giving you buy signals like hell on that falling wedge structure. And there you go. That was targeting, good targeting over there, and that threw a level to the downside, to the downside, to the downside. We actually had 2 targets. There's a reason for that. You can find out by clicking the first link below. But that was a key level, the 42.5, and the 47.5 is the one that was the first head and shoulder. The 42.5 came from the second. So the later one gave the lower number, but it was a bigger head and shoulder. Just to remind you why these two were so important. This was marginally higher. You know, we traded 69 here instead of 64. And then you got that head and shoulder. This absolutely picked the bottom. That absolutely picked the bottom at 16,290. You traded 15.5 odd to the low side. That absolutely picked the bottom. Bitcoin actually, and we're not specifically reversal pattern callers, but look into the eyes, look into the eyes. This is an important point. Bitcoin has been, the bear market of Bitcoin has been wedged between major reversal head and shoulders to the downside, and the subsequent bull has turned on a major significant inverted head and shoulder to the upside. Yep, that's how it's worked. There's also been other structures that have existed. We can remind you of some of them. That is your bull and bear book marking events, but there you had a capping descending grind line on a falling wedge. So there's also a structure that ran like this. Squeezy, squeezy, that Japanesey, and out you bounced on the bottom, and it was part of the right shoulder. This is where you get so much confirmation from patterns, because you get multiple draws that are all insinuating that something big is happening. Rally here, revisit, and then up, up, and away. That was the break of the falling wedge as part of that bear market cycle. So you're getting that overlay, that turning, okay? And then we had a loss of confidence that we had over here when we were staying so low for so long. But the one thing that was positive, it went super low vol, and it started to creep up. There was a little bit of a clue that we probably missed, but we were concerned about this such a long time. Coming back to the 25k mark and then hanging heavy for so long, it got us thinking, and we got out. Then, of course, it broke. We had to get back in again, and we missed a part of the action. Thankfully, we got back in, and we're doing just fine, and we're having a grand old dandy moment, and the Bitcoin is the dominant one. We will go to Bitcoin dominance after this. But going back to all of this, this is the reason why these two levels, both 42.5, which was the neckline for the second head and shoulder, the bigger one that called the bottom, as we've illustrated right there, the second one, and the first being 47.5. So that is a really interesting level, because it was a support for Bitcoin when it had got above that, not once but twice, and then when it surrendered, it saw a fall that actually saw you trade in the upper 28,000s, 29,000s on the lows of that falling wedge there, before our cot said, hey, you can accumulate again, and we were calling bull into that while everybody was saying end of. However, the end of wasn't too far away. You made a marginally higher high, and in fact against gold and in equities, tech equities, you failed to make a marginally higher high. So there was already a divergence between other assets. People were contracting and walking away from the highest risk asset and going back into tech stocks, which they see as less risky than crypto, especially as news of 3 Arrows Capital and then later to come FTX, all part of the bear market that just came and kept coming at you and wore you down. Well, good news, it's over. So that's why the 47.5 is so interesting. So if you've got a snapshot of that draw of all the reasons why we're in a bull market and we're in this channel on the upside, etc., everything good, and I would expect us to actually break the upside in momentum at some point. Let's talk about why the 145 three fat Chinese ladies. Well, there's another aspect to this that encapsulates the entire bear market on the one side and the burgeoning potential bull on the other side. And you might see it, but I'm going to help you with it. It all involves this fat blue line as a neckline on a new head and shoulder. So by the way, all those head and shoulders that we showed you on the previous draw all performed to target and were legit draws, and I've yet to see others that have highlighted either of these macro events in cryptos. I'm not watching too many of channels, maybe some have subsequently, but there's very few channels that are talking about this, with a possible exception of All in Crypto and one or two others. You're probably not getting much of that kind of analysis that picked up those head and shoulders events. So now you have a left shoulder with a 47.5, and you have a huge head, which is the whole bear market in essence, down to here, and you then have this burgeoning bull that is now getting a somewhat accelerative in the direction of the 47.5. So this is speculation. We are forward looking. We are always forward looking. It's quite possible it doesn't occur. If Bitcoin were to turn around sharply and get thrown hard down, it may happen in the future, but certainly the time frame for it to happen has definitely been pushed out. It doesn't mean it absolutely can't happen, but it could also spoil the structure that we're expecting. So what are we calling? We're calling that a left shoulder on a major bear market situation. In short, in fact, the flag that you saw over here that gave also bear flag targets to the downside, covered in countless videos, not going to do that here, actually is part and parcel of the return move to the 47.5, that key level that started there with the break, armpit 2 and armpit 1 over here. That key level that ran all the way through this structure, yes, it ran through the middle of that little flag that was your right shoulder on that, which is also very telling. It's a big tell for us when that happens. And then you got a return move to it. That turns into your new armpit 1 for us. You can learn how we do inverted head and shoulders, giving you a small top line idea with us in our community as we trade these kind of structures across all markets. And our trade leaders are dealing in some of the smaller caps, for those of you that like it, the names such as Floki and AI this. There are setups occurring in a number of them. Some have been looking at HBAR, a couple of others. So This is what's going on inside the community in crypto, and there's a whole spate more. I tend to talk about the big tokens because we are not interested to ever be in a position where something could have been deemed promoted by us. We are not involved in promoting any tokens. We are dispassionate traders of what goes up, and most of what I talk about on Freeview is tokens that quite would be very difficult for someone like me to be able to manipulate, or anybody else. So watch out for people that offer you tokens in illiquid, brand new tokens, and then are dumping them on you whilst telling you what buys they may be. So were this to continue, and there's some assumption already in this, were this to continue to our critical key level of significance of 47.5 after a break, it's our supposition that the odds are reasonably good that it may have a rest at that juncture and pull back a wee bit before settling down and reconsidering its state of play and coming back up. By the way, live trading day with us on the crypto markets, hour and a half non-stop. After our hour and a half traditional markets, where we'll look at the dollar, we'll look at gold, and we'll look at many of the other things anti-fiat that have played a key role in the triggering of this Bitcoin bull market. And you can be part of both of that. And all you have to do is grab the live trading day link and purchase for yourself either one session or 3 for the price of 2, and be with us 3 months in a row. Plus the recording is safe for you to watch throughout the tenor. So if you're buying 1, you'll have a month of access. If you're buying 2 for the price of 3, you'll have 3 months of access to all 3 sessions that you'll be part of. Anyway, so were we to get that and have the potential right shoulder after the left shoulder, what this would imply is we have a very large bear run, which involved all the negatives of 3 Arrows Capital, FTX, etc., the sell-off from 69, right the way through to the long recovery, reverting back bullish and a nice strong side. Note how in the beginning, I'm going to change colors here, the spill is very hard. It's quite bowling. It's like a bowl. The sides of a bowl are steep from the rim down, and then later they round out and they go horizontal and they go the other way. So very steep bowl side here most of the way, and then slowly starting to stagger around. Here again, we've gone all the way across here, all the way, and we're actually getting quite steep to the upside. If that momentum continues, you could get a fairly early run of the 47.5. I'm not saying there can't be a little bit of wind-ups on lower time frames, hours and half hours. You still need to generate some energy. Things do not go up in single straight lines, but it's quite typical of a bowling out head to be steep early, and then to slow down and then flatten and then to slowly recover and then get steep again on the bullish side. That's why you've moved so violently since not much above the 27 levels and the 25. That was 25 levels right there, and then pop in quite short succession you're already through 43, and I'm sitting here talking to you about 47.5, and it's not even a million miles away. So that would give you this big pink structure, and we see that as a target for 145 and 3 fat Chinese ladies. Isn't that lovely? Aren't we going to be happy to see those girls? Yes, indeed, sir, we will. Anyway, so that is the first technical setup that I've seen and drawn that has given a target beyond 100,000. In fact, we haven't even seen targets beyond 90. We've never discussed 90. We had one disproportionate, slightly screwy target, but everything was going up that once suggested in the 80s, and it failed. So this is a good quality structure. Not the hugest shoulder given how lengthy the bear market was. We're in log scale at the moment, but it's significant, more than significant enough, because at the lows here you can go take that lower part of the shoulder there, and you can see it was right down to the 30s level. Let's get an actual value for you. The low of it was 32, roughly 32. We can actually put the cursor and give you the exact number, 32.9. So 47.5 down to 32.9. I think you'll agree that's quite a substantial $15,000. It's quite a substantial shoulder. You can't say, yeah, it's not big enough. It's big enough. It is big enough. Okay, look at my eyes. It's big enough. Okay. All right. So before we get our 6 shooters out and fight about what's big and what's not, we will accept that that's big enough and say a beautiful, beautiful potential target. What still needs to happen? Make the neckline. Has to happen, hasn't happened, but looking like it could happen in the not too distant future. Rest after the neckline. Usually you typically run the level for a fair bit before you pull back. So it's not going to stop on the mark. It's probably going to overrun it. Ideally a shooting star, something like what gold did would be just for handy, you know, major push up and highly momentum and then a smack down. But that's okay. You come back down. I would like to see a low in and around just below the 40s. So something 39 again around here, and then slowly calming and basing. That could be a boring spell. By the way, why did I just jump in and talk about the live trading day on Friday? There's a key moment coming. We are sitting here on Wednesday. There is a key moment coming, and that moment is live trading day. Live trading day. That's right. It's coming. And the live trading day is based on non-farm payrolls. So data will be coming out. Data will be coming out. Let's say goodbye to our big African smile there. And look at the data that will be coming out. So non-farm payrolls is the day when they determine how strong the US economy is, depending on the BLS's lie surrounding how many people got given new jobs. There's all sorts of models that work with that, and you get an unemployment rate, you're going to get consumer sentiment as well thrown in, you're going to get the non-farm employment change. Amazingly, they always appear to be adding jobs, but in fact a whole host of people are losing jobs at the moment because there's a model that adds stuff in based on assumptions. That's how it works. So it's not really good data. It's manipulation and claims, but who knows? We'll see. Average hourly earnings, they're expecting to climb, which might be a bit aggressive from 0.2. By the way, 0.2, if you're a 0.2 last month, 0.2 times 12 is wages going up 2.4%. Now, if you think your actual inflation is just 5%, well, I've got a bridge, an orange bridge in San Francisco to sell you. But I can tell you it's a whole bunch worse. You get lies, damn lies, and statistics, and BLS are right in the mix there. But anyway, that's a little bit of what's coming on Friday, and it could have a seminal a kind of effect, or it could lead to pivots, it could lead to volatility, or it could lead to a surge and an increase in the momentum. Ours is not to know how that will play out in terms of the numbers. I don't know what the data will be. I'm far from that, I'm afraid. But we will see technically, and this could be the thing that takes us through strongly through 47.5, only for it to die. Or we could run 47.5, you know, today and tomorrow, and then it dies on non-farm. Or non-farm pulls it back, and it takes a while longer. Don't forget there was quite a bit of congestion here in this zone round about this bear flag. So you could get pulled back and it could take another leg up before you get it sometime in a new week, the week after, etc. So the pattern can extend and be pushed out potentially. We are far away from having gone parabolic. This is the strongest move we've had of a bullish nature from here to there so far. Apart from that recovery moment there, that was decent, and the lows of the flag probably taking you into there. So it's not been huge on the upward surge yet. It's far, far, far from the parabola. Just as a reminder, keep those 3 images in mind. I'm going to pull a bit of history back and those will move out of sync. Compared to that, for example, you can see what small fry so far is to that high. Those 3 are kind of tiny in retrospect. We can replace them in the right place given that the view has changed, but that is not the same kettle of fish. I think you'll agree. Even the most recent events are still some way short of the mega surge of the first cup gold nugget of the previous bull market. Okay, so it's still early doors of recovery. It's still early doors of recovery, but getting into full bullish spirit, I think, and with that 47.5 we would probably break with real momentum after any shouldering event, and that would be most welcome. And that could see the first time we're giving you a target, and it's quite deep into the hundreds, of 145 and 3 fat Chinese ladies. Okay, what about ETH? Let's talk a little bit about that. But just before, hold on, just before, I promised you BTC dominance, so let's just try stay organized and do this in the right order. Bitcoin dominance. So this has been a call that we made about the honey badger that has been absolutely right. In fact, I kind of wish I'd been a bit more aggressive on trading the BTC dominance call. Yes, we were positioned pretty well for it, and I've taken a couple of leverage longs on Bitcoin dominance. But because of my bias to the mega moves of XRP and one other that will do even more than XRP, I'm not talking about XLM, I've held mostly that token. In actual fact, the dominance since this box, we called this box and said you're going to break. We said you're going to break here. You had long hang time there. It was different to the rejections previously. Rejection, 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 rejection. We highlighted this count number of times and said Bitcoin's coming out of the basement, that orange box basement on dominance, and then maxis are going to love my message. You may recall me saying it. Maxis are going to love this. And here they are, theirs is the only token, etc., etc., and so it will go. So you've had another surge after this surge pullback. You've had another surge on the Bitcoin dominance, and you're sitting at 54.78. Just to be clear, 55%, 5% more than half, is the sole big guy token. That means everybody else is less than half. They're at 45%, the rest of them, all summed up, which is still pretty significant and climbing at the moment. So Bitcoin has actually been, let's drop to a lower time frame and check this out, because we want to have a look at, is this going to remain the norm? How long is it going to be honey badger? Bit of a blow off, a surge here, bit of a blow off. You can see these squeezies, by the way. Rising, ascending structures with a key inflection point. This is how we typically explain and discuss these, with melt up type 3, which is at the top of rising wedges. And that's what happens in bull markets. People always think that it's a downward break. No, when do you expect exactly the opposite in the corollary? And the squeeze is the power. That's why you surge, and that's why it was a great time to be Bitcoin long. So maxis are enjoying the run more than the average, the top 10, top 15, top 25 token, unless you've recently been in Solana or Doggy. And you might then be beating Bitcoin slightly. So that's dominance. Now, it's impressive. It has to be said. It's impressive in terms of its relative performance. And actually, I'm not sure that it's over either. I think it can go on longer than people think, and I think the fact that Bitcoin is being earmarked as the one that's going to be investable could see it assume that, but that digital gold store of value aspect, not for consumption, not for transaction, but digital gold. They will blutter on about Lightning Network, etc. It doesn't matter what you think you're going to do and how good you're going to do it. The market's decided you sit in that box, and if that's store of value, hey, that's what you're going to be given. So you could find that Bitcoin is in that category. You might get a small pullback here, and then you might be popping out again. So I suspect Bitcoin is going to do that 47.5, and that the rest of the crypto market will probably barely be doing anything close to what Bitcoin does, with the exceptions of, say, Solana and Doggy on and off, and one or two other flyers that are foxy to find. The likes of XRP, the likes of Binance token, let's just run the gauntlet of the top 10, for example, are probably going to underperform, including, I'm afraid, say, ADA. You're probably going to do less than what Bitcoin does for a bit, which makes it a good idea to potentially have some actual Bitcoin in your holding. So, 14% over the last 7 days, and 10%. These were the stars, and we told you about both of them. You can see that Binance at 1.6, XRP at 3, Solana strong-ish, but not actually now lagging Ethereum over the last 7 days. Obviously stablecoin. Cardano's livening up. We're going to be covering it, but actually it's lagged most of the time, Ethereum and Bitcoin, until the last 7 days. Doggy, an outlier, and AVAX has stormed into the top 10, also a bit of an outlier. But capturing these, unless we see, some of our guys saw AVAX HVF structure and took it. I didn't get engaged with that, so I'm not claiming it. You can see Chainlink 6. So actually, Bitcoin is still one of the best to have had. Shiba, by the time you're getting into these, that can lose 40%, 30% suddenly and be exceedingly volatile. Remember, I need to introduce you to a concept, guys. That is risk-adjusted gains. Which is the better gain? A 14.71% on Bitcoin, that's less likely to lose 30% in a single week, or a 18 or a 20% gain in Doggy that can spill its guts by 30% in a week. That or number 25 on the market cap list, or number 69 on the market cap list. Do you take that bigger number? Actually, no, because if you're holding and you're investing in it, it's a safer and better 14 for risk adjustment volatility. The 14.82% risk adjusted for volatility is far better than a fast flying and equally fast plunging 20% from shitcoin number 798. It's not about grab the biggest number. You have to think about all aspects. It's less likely, while it's needing to be accumulated by key investment funds that need to have Bitcoin in ETFs, that it turns out it's going to drop 30%. But ABC new hypey monster thing, well, good luck. Okay. So that's a point on risk adjustment that I think many need to understand as well. It's not always chasing the absolute highest number. Not if you're going to be left holding a shitcoin that can halve the next day or really lose a bunch. So I would argue the Bitcoin 15% is an exceptional return relative to the other things that have gone on, and I'd certainly take it over most doggy moves, even to a higher multiple. Now if you catch it and you bank it and you close it and you're never touching it again and you got a bigger number, okay, great, you won the contest for now. But if you're investing in it and you're still holding in it and you've had a good spell, it's more likely you're going to hold on to more of that 14% and have less volatility, less bounce around, less nerves, less panicking out at a low and jumping in at a FOMO high because it's got you nervous because it's so skittish. Okay, so let's leave dominance. Let's go talk about Ethereum. Ethereum. Oh, certainly a status as they come, like the rest of them. You know exactly where I stand on all of this. This was an interesting study that a community member was doing. We do a lot of 360-degree analysis. Credit to the community for churning this one out. And that particular individual, he knows who he is. And he was just highlighting the value, and we can go log scale on this. But what are we looking at? Ethereum divided by gold. So I like to benchmark this. The reason I like this 360 analysis is gold is money. Gold is money. It's the safe money, and it's easy to buy and hold and have physical, and it's harder to steal. Someone has to come to your house with a gun, and that's if you have it at your house, and that's if you even know or remember where you buried it, or if it's available for the next 24 hours, etc., etc. So there's lots of mechanisms that you can self-custody that make it pretty difficult for people to steal from you. And as after FTX, the digital world has got me a little jaded. So this particular structure is what we call first structure in a new trend, and it can overperform. We're using a working draw tool, by the way, for our HVF that is under development. Here you can see there's a nice funnel. Super tight squeeze. It is a risk reward of 13.47, and its target is 1.7 times where it was 0.9. So the interesting thing about Ethereum and gold is they're basically priced at the same point. So Ethereum's currently at about 2,200 and gold traded 2,148 before falling back. So gold is now a tiny bit behind Ethereum, but Ethereum has jumped ahead now, and that's why you see a 1.1 valuation. Ethereum is 10% worth more than an ounce of gold. One Ethereum is worth 10% more than an ounce of gold right now. And that's pointing to heading for 1.7s, and we expect this to break and go further. Don't forget that we also have bullish expectations for gold in due course. That will see gold going up. So it's not going to be going down forever in terms of our opinion, and that could see gold going back up really strong. So it could be going up against something already going up. Really nice structure. Good move. Nice break. Little wind up here. Boom, 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 boom. Made the first interim really early and quick. Came back down, bounced, supported on it, squeezed nicely there. Up she goes. So I've got quite a 2-day time frame here to highlight, but let's try to reframe that a little bit better so you can see a little bit more. Next interim is around about there at 1.2, and next is at 1.7 times a gold ounce, whatever a gold ounce will be. Broadly speaking, although it got rejected quite strongly after its 2000 break, I think it's going to come down a little bit, but then it's largely going to start going up again in good form. So the anti-fiats are on the charge. So that's gold against the Ethereum against gold, and this is Ethereum against the euro. So we also do cross-market analysis against the euro also. Good structures. Now, the reason we do this is because on Bitcoin, it didn't quite give us an HVF because this high was marginally higher, because at that point the dollar was weaker than the euro, whilst here the euro. So you actually get some compression here. Don't forget, a lot of the old legacy money is European based. Yes, they have dollars. Yes, they have euros. Yes, they have all of them. But, you know, the euro is still part of that cult. And so you get it. Boom, boom, bosh. Nice moving up. And again, Euro's target. This is the key point you came for. Ethereum, Euro's target. At minimum, don't forget, overperformance is more expected. It wouldn't be a full close of our positions here. So that's at 3257.39. 3257.39. 3 and a quarter, basically. And some more to come. So we'd take some off the table. Currently trading 2.1. 2108, a little bit higher than gold market at the moment. On euros, remember, gold priced in dollars, so that's 2,100 euros. Okay, good. So it's looking good for Ethereum. So we're not going to show you, well, should we show you this is a better chart than the USD chart. So I'm not going to show you you always see the USD chart. I'm not going to show you the things you see all the time. I'm going to try to show you things that make you think and give you a new perspective on something that can be really, really powerful. By the way, this was Floki. The guys were in Floki, and it's going up. Not me. I don't tend to get too heavily involved in that. The smaller ones, but every now and then, if it's a beautiful structure, we do. There was another bit of squeezy action in there. They were also in that. Did you get the Floki upside? If you want to trade that and you're on smaller accounts and you can get in and out fairly easy, you know, if it's got an HVF, we're ready to trade it. Where does it go? I think it's going to run the 0 point, all the zeros and 5. How many zeros? I can barely, my computer eyes can barely see. 4 zeros, 5. So that would be my opinion on how that one will turn out. Currently at 4 zeros, 4. Basically, so another 20%, 25% in fact, to come. But you need to break into this, and maybe you can buy it lower down. You need to have a look at it on a lower time frame. This is a 12-hour, so it's quite a decent time frame. So it won't happen in 5 minutes. Be patient, but you might be able to pick it up on a lower level. You may even get a wind-up structure. So it did get a little bit broad and a little bit volatile here, as you can see, like that. So you might get a chance to pick it up a tiny bit lower. So don't just wade in. Build your wealth slowly. And remember, this is not financial advice. Nothing we do here is financial advice. This is, hey, that's how I trade. When I say you could, I'm talking about me. I'm talking about if I wanted to do this, I could do it in the following way. This is what I'd expect. We can absolutely be wrong on our opinions, and have been, as some of you will know. So market cap on XRP. So the XRP army. Where is the XRP? If you're part of the XRP army, hit the like button right now. Come on, you good things. Smash it and share it. Giving you some good news, damn it. So cheer up. The statisms will win out in the end. So we're certainly still seeing. So by the way, you're at a market cap of around, it's showing here, of around 34.27 billion. So you can see that if we have a target of around 950, it's probably going to run the 1 trillion mark. So if you're at 34 billion, let's just say it's 33.33. 33 33.3. So let's say it's 33.3. You multiply that by 3 and you're going to get to 100. If you're going to a trillion, you need another 10 on top of that. So 3 and 10. Again, it's the 30x that we keep talking about. I'm not getting out of this thing. This thing starts going and the CBDCs are needed and they start peddling a new, you know what, in the, don't mention it, a tissue, we all fall down, you know what I'm going. They come out with that and, oh, got to bail out the banks, got to bail out the insurance companies, got to bail out everybody. The debt market's collapsing, the rates are pumping, everybody's losing their house, can't pay their credit card, repo, blah, 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 scare, fear, demand destroying event. And guess what? The ATMs go dark, whatever. Here comes your new statism currency, CBDC, already tested, ready to go. Isn't that funny? Couple of days arguing and fighting in a closed room, telling you how hard they worked overnight to save you from the inflation that you caused. Yup, gaslighting aplenty, all of that nonsense. Doesn't it feel good to release all that shit? I feel better now. Thank you. So, yeah, off you go. You're going to be at a trillion market cap. What's that in numbers? Look at that jaw. How nicely it jaws it, by the way. Look at that. Very nice. Full target. Interim, there you go, and first, that would be it potentially, could be it potentially. Let's have a look on it, and I love doing this, and you guys get freaked out when I do this. Yep, this is hard. This is going to turn your world upside down. Inversions, inverted charts. We're looking on the inversion version of this. You can see I tell you there, inversion. So we're looking at this upside down. This is number go up in that direction. You see what I'm saying there? Do you see what he did there? He turned the world upside down, and I turned the candles down. So these red candles that are appearing down on the chart are actually positive events, and these green candles that are going up, as they should do, but we're on the inversion template, are actually losses of value. So now you understand what we're doing. And we've drawn the inverted, and we've had a look at it as an inverted. And guess what my conclusion is? It's a great setup and structure. That's right. You guys are going to get wealthy and rich thanks to me. Those of you that elect to make your own decisions and decide that there is some point to the XRP holding will do rather dandy in due course. That's right. Why? Well, continuation pattern magnanimous. It is a large continuation pattern. Do you see that's a 10-day chart? Who does 10-day charting? Well, I want the pattern to fit in the framing of the screen, and at the same time I want to see the trend that brought it in, and the trend is down equals good because value goes down too. So that was all bull market from when XRP was initially established. Lots of inflation in value, that is. Little bit of a squeezy Japanesey, down. So that was all of the bulls that led it to its, I think it's all-time high in and around the 2.8s, 2.5s, 2.6s dollars. We're on Bitstamp here. It might vary by particular exchange. They've been around a lot, so we look at them, and they've been a long time, and they've managed to never piss anybody off, it seems. They're just like, yeah, they chill as an exchange, so we get some data. So that was your secondary high, that was your third. So essentially you've had this big convex, came to you very convex, fast at first, and then flat and rounding out, and then steep down structure that has been setting up. That's it, guys. And then you squeezed here, you can see that descending triangle. Remember, that's good because we want to go down. There it came. So that is your structure. So you have this overall structure zigging and zagging, lower volatility for XRP. Don't forget, it never made a new high over here compared to over there. So it's got half a bull run still in the bank, and it's got a new bull run to come because the SEC did what it did and chose to mess it around and cap it from getting away too far too fast, and kept it low so that all the Freemasons and all the Kabbalists and all the other insider cartel members that are all part of wanting to get rich at our expense and be insiders and never get persecuted because they are running the game for them are all stacking it and needed to have the price kept low. And hence the SNC played its role, and then you got that sell-off and you got that rally. So you've actually got a very good structured pattern here. So let's once again draw it for you. long lengthy spell, but in the end it dipped down there, and then you came up here and you are now rolling. And if you, like me, think that goes down and eventually runs that means you're doing real dandy. Why? Because you're going to get that value, whatever it is. And how different is it to the other? Well, it should be pretty much the same if it's the same exchange. I'm not sure it was the same exchange, but it's a similar exchange, so it shouldn't be too different. And what is the value when you point it there? Yep, 16.99, 16.76. And that probably means, as I say, a $17 run as part and parcel. And don't forget, blow off potential in here. So it could super spike in that. So you can do a partial close at $17, retire rich, join our community, and make sure you keep your wealth now that you've made it. Because it's not what you make, it's what you keep. And we help you retain wealth in a world where there are forces that actively want to ensure you are a serf and ward of state. And hence, it's kind of valuable that. And you can share information, make use of services, and now you have the money to purchase them. Now you have the money to protect it. It takes money to protect money as well. You need to do smart things, lots of things, and we'll be there to help you to do that. So first we make you rich, and then we help you spend some of it on keeping rich. That's smart, isn't it? Yeah, makes sense to me. Click the link below. Book a call to a friendly person just like you who's engaged in the crypto markets, looking to achieve the same only 4 or 5 years further down the track, and enjoying his journey, and now trusted to be a representative for our lovely little group of traders and wealth builders. And by the way, no 9 screens and ticking, trading the tick, and 14 frazzled days and hours on computers. No, I'll be having my second swim in the sea, not too distant future, shortly after this, after greeting the sun. Did I tell you that? I think I did. Yeah, it's good for your health. I want you to be healthier. I want you to be wealthier. I want you to be wise. Because if you are unhealthy, if you're toxic and you're trying to get rich, you make aggressive, pissed off decisions. That's what happens. Toxic people make angry decisions, make frustrated decisions. Patient, calm, balanced, in good state, good rest people build wealth successfully. Not immediately, but steadily. And they establish plans, and they get support and help where they need it. So that's where I want you to be, and that's the game. So XRP, whether I look at it upside down or whether I look at the right way up, it looks good to me. So stop panicking. It has underperformed the XRP dominance. Let's just show you. You know it's underperformed relative to Bitcoin. Let's show you if you're in XRP. By the way, you don't want to be the dog with a bone that then pivots into Bitcoin and then watches XRP run. Let's do it on a normal time frame. I really like this little wind up here on XRP. I actually think at the moment's not too far away, by the way, guys. I really do. I think this is a lovely little setup. This little bit we should be watching. So that's the macro on the 2 weeks. You should be watching this on the daily, what's going on in here. Right here, yes sirree. Let's take that fella off now. We're not looking for any new draws on the lower time frame. This is building up. That's a nice basing and rounding. I am happy with what I am seeing here. It looks even better actually on the bigger time frame, which is ironic, but this comes up and goes here. It's looking very, very good. This is on the crypto cap. That's why you're not seeing any values. We can go XRP and get it on Binance. What the hell? Oh, so many lines. So that's Binance. You can see you're at around 63.57. I can see you getting back up, getting back up, getting back up. And when it breaks, it will break. So let's understand XRP. And the same goes for XLM, by the way. It is a spike and drift token. It will spike often, and then it will spike, no, not so often, but it will spike substantially, and then it will sit in long periods of pullback drift. So if you have a look at this, we're on the weekly. Okay, go back to the 2 weekly then. You can see that generally, and it shows up better actually in the dominance, that you have periods of real run. You got a bit of a slap back there, periods of real run, and then, you know, congestion, drift. And in fact, I do think the dominance shows it better on XRP. So let's show it, because it will show you how relative to the other tokens you get infrequent bull moves but very violent ones, and then you have much longer periods of just generally giving up slowly ground. So here's the dominance chart for XRP. What you can see here is you get absolute insane surges in dominance. That was early doors, obviously. And then again here, But in between that, you can get periods, typically you drift. You don't tend to hold a level. So when nothing big is happening, you're sliding slightly. And then you get a surge. And even smaller ones, after you've been drifting for a while, you get a quick small surge. Those aren't the real big deals. Those aren't the ones big enough to make you money, but there, and there. And right now on dominance, you're drifting off. But this is a very key level, in and around the 2% level. We've shown you that before. Let's put on the lights again, and you can see the lines that we've drawn. This big blue line is a very important level. You typically get surges above it. You don't stay below it very long. So apart from this period, that was the only period you had a really lengthy period. The token had just come into existence. There, you have very short periods at this level. This is a W bottom, by the way. We've drawn that. There's targets of 8.11 in dominance. That's going to be huge. Again here, this was very bear market, and the failure to make new highs kind of worked against it. But it's not actually a lengthy period below that line. This is super small below that line, and you're drifting a little bit back towards this. So a surge is not necessarily very far away at the moment, because XRP, in terms of its dominance, doesn't like to be 2% or less on total market cap. And most of its time, it's actually in this range here, the red and blue zone, most of its time. And we've been quite on the low side for a while. Why? Missed the last bull. Not entirely, but mostly. So there's real potential to spike up to the other side and actually get right into the extreme side on the other side of the extreme event as well. So that's kind of where we're at on this. And I am saying the next spike is not too far away. So it's a spike and drift on dominance. And you see this because you're seeing its performance relative to other tokens. Let's just remember, this is log scale. That's the midpoint, the orange, even though it looks out of proportion. So you've actually spent quite a bit of time in the lower half. You're due a visit to the other half. Let me just take the log scale off and show you that. Now you can truly appreciate when I talk about spike and drift. And boy, can you spike to here and beyond, potentially. But I would certainly see you're going to go above 11% in my opinion, with a reasonable chance. And you've actually had quite a reasonable spell prior the SEC events. Don't forget this, the recent damage and the fact that you low slung is a gift. It's the SEC events. See there? That's upper half. See all of that? That is mostly upper half, but for that little dip there. Now, more recently, lower half. And an extended period in the lower half. This is the railway system of the likely railway system of many of the central bank digital currencies. My suspicion is you're not far away from getting a little bit of respect again. So missed the full bull on the last one. That's it. And you're actually in the doggy box, the low side there, and some short spells here and here. So at these levels, you typically get some interest. So I'm expecting a spike, and I think the next spike will be a far more interesting one. And we've got a target for 811. That is this purple line here, which comes from that W bottom, that pattern in there. I'm on the 2-week time frame. It's big, but you saw it when we were on the log scale. So let's go back to log scale and remind you. So XRP will do, but right now it's the Bitcoin and Ethereum show, in my opinion. But it will do, and it will do fairly soon. And in actual fact, our special token that will do twice what I think XRP will do is in a similar state. It's also been a little bit ignored. So it's all been about the Bitcoin and Ethereum, unless you're in Solana and Doggy, which, as I say, you can have Elon meme messing around, that clown, or you can have Solana venture capital with the system that always breaks, but clearly has a role in statism and is going to go up. because they're going to use it. So that's the good news on XRP. What about my suffering ADA fans? Long-suffering ADA fans, positive news for you. Let's take you to the better news. And there's good news all around. And so ADA fans will be delighted that for once I'm not showing, telling you technical difficult news for ADA. It's going to improve. Unfortunately, though, it is not an HVF, Hunt Volatility Funnel setup. No, it is something else, but it is still technically valuable. So let's go straight to the one that will show me the draw as I want it. None of those. That's a tiny bit better. Okay, so let's maybe use that one. There was another, actually. Don't know where it went. Let's go weekly ADA. So some time ago I was highlighting a W bottom was forming here. So let's just look at this area. So this was an inverted. We called ADA will break down to the downside and sell off. Not that long ago. Go and check the videos, they're there, why ADA will sell off, and that was its triggering event, and that was its target, and in actual fact it traded right down to 0.25, which kind of was a soft support. You can see you wicked below it during some high news days. You wicked below it, but generally you stayed above it. Not many body closes. I think that candle there, and that candle there, and that candle there, and that candle there. 4 candles closed below the 25 cents. 4, not many. So it's a pretty much a soft to hard floor in terms of support. So what's been happening since? Well, it's cheered up a little bit and it's got on the run, and let's show you why this is a good thing. So first of all, what is the pattern? The pattern is what we were drawing here is a W bottom. So kind of, I think the final low for the candle bodies is here. That was the lowest wick, and it was a drama wick. What happened since then? In fact, I'm going to take these lines off and I'll draw it on the overlay draw. It is a W, and I might also just drop it to 4 days instead of a week so we get a little bit more detail. So there was the downside HVF. Let's overlay draw it for you with the blue. In fact, we'll use the blue for the neckline. I'm of the view that you have around about here 42.5, I think it is. That, since you're bearish, so that's a key, it's a key zone there. It's a bit below 45. You can see 45 is there. It's around probably 42.5. That's what saw you tip. Now you made a little dip. Whoopie, don't want to do the draw in the right way. Change it. Little dip, but largely here comes the W bottom, round about the 25, back up to the neckline. Round about the 25, you were bouncing around, messing around, holding the 25 for a while. Let's just draw it like that. Quite a low hanging period, and then up. And you are now making that key break, which I assess to be a seminal one, very important. It's a key level of significance that is likely giving up. That will probably see you shoot through it with momentum, but not too far, have a tiny pullback, because when you get a small shoulder on the left with a sell-off like you did there, you often get a mirroring small shoulder, pass me another schnapps please. There you go, small shoulder, small shoulder on the other side. That'll mirror the previous one on the left. So W bottom, and what does that do? Well, it gives you a projection to the upside. This was not the draw I had actually prepared. However, in fact, I might have it saved. Let's have a look. There it is. You see, he's a good boy. Which one was it? It was Binance on the 2-day. So what are we calling that? Well, we call that, and this is what you're going to get as a result of it. So let's just maximize that so you can see it clearly. 83 cents on a W bottom. So why, how, where does that all happen? Well, let's get it out of absolute biggest mode. Because that's a bit of a pain in the ass. Let's make it big, but then I can't draw. So I'm going to draw on this with a pink pen so it doesn't get confused with a blue pen. You can see that 42.5 neckline. Go with the pink pen. Then you can see that overall down leg. This tracks the geometry. That was the spike low. It was super low, but that's the one we run with. That's to 42.5, and that's a projection up there. That will run you to roughly the 83 cents, 42.5 up to the 83 cents. So you fell to at the kind of low. As I mentioned, it was the hard floor was kind of 25, but I think 23s, many of these were in and around the 23.7, so it did go slightly below on a soft floor, like dip into the sponge a little bit before you bounce back out. And as a result, we expect a nice little wind up you had there. By the way, I was also highlighting that. Remember, we're on the 2 days time. You can go look at those in lower time frames and spot setups as they are showing on those lower time frames, and then you can get hopefully that armpit 2 after making that armpit 1, and this is your complex head, which is a W. That's why you often get smaller shoulders when you've got complex heads, because some of that volatility that goes into a deeper dip of the head is actually being expressed in the head. You're getting that secondary rally after you hit a low point, and then you're getting taken down again. So the volatility is carried into the head, not in the shoulders. And that's why you get that dent in the head, the W head. And you can learn about these concepts and principles about the shaking out of volatility. And then you get the low vol and you start to build and squeeze up higher. And that is positive because you'll be undoing the funnel. The funnel is key levels of significance. So that's why I think you will rest at some point, not too far off on a dip, push a little higher, blow off, rest, and then have that little shoulder. I don't think it's going to be a deep dip, but there may be opportunities to buy at 0.39, maybe sub 40 on that lower dip, or maybe at 40, 41 instead of the 42. Where is it now? Let's get the prices accurately. Where is ADA now? Get the accurate pricing and have a look. So it's at 43, and I think we are working on it's already passed through, pretty much passed through the neckline. I would put it, what was the high point there? The high point was looking up 44. So you could argue the 44 was your neckline. You might get a bit of a bigger target if you take it right to the 44. I think I was a bit more conservative on that in the initial draw, but you'll still get a good target out of that one. Let's have a look. Let's see, have we got a draw a line, not a horizontal, a trend line, please. Okay, I think there's something there already. Maybe there isn't. Maybe it's a gray line that's overlaying. Yeah, so 87, tiny bit more if you use the 44 instead of the 42.5. So around about 84s, 85s, 87 range, pretty good. So I think you're about to run that now, and you're having a bit of a squeeze. That's why you got this wind up. Let's choose a slightly thinner Koki for that one. That's why you got that. Squeezy, push through, dip back. Small shoulder, the last shoulder went back that far. I don't think you'll go back as far. Push back, small snappy shoulder, go back up. Could have something. A couple of things that with the non-farm payrolls coming could have a effect. So we could have a blow off into non-farm, or non-farm could be the pullback. It's going to probably play a role. You can join us live trading day. That's right, with the recordings, 3 hours of time, half-hour break, traditional and crypto markets. Click the link below for that. And first link to book a call, by the way. And by the way, pure gold for getting some bullion. Simple FX. I'm using crypto as collateral to trade traditional markets, FX, various things, gold, silver, and crypto markets. It's awesome. I'm using the Simple FX. You can click that link below as well if you want to accumulate gold on a monthly basis, bullion vault. And right now, many people still ask, what exchanges are you using for trading got a little bit of Bitfinex, a little bit of KuCoin, a little bit of and SimpleFX, and because I am controlled, I also have BitMEX. Okay, so a couple of questions that sometimes pop up. I just thought I'd answer them. That is ADA. That is ADA, a little bit of a recovery on. But will it dominate? This has to be the question. And this is the criticism I've had for ADA. It's not looked like it will be the dominant one. And I've been accurate. ADA has drifted. It's drifted off in terms of its market cap size relative to others. Let's have a look how ADA's dominance has gone. And here you can see we've continued to say it's been soft generally. Is it about to turn on dominance? You can see it's given up, it's given up, it's given up. You've got the likes of Sol and Doggy getting all the love at the moment, as well as Bitcoin and Ethereum. Bitcoin and Ethereum's 14 and 10% is going to have a far larger effect on ADA's relative dominance going down because they're massive caps. So this has been a sell-off, and that inverted HVF was brutal. However, again, final capitulation there. Up, down, up, and then kind of indifferent. So there is a sign that there could be some basing effect, but it has been an underperformer throughout the bear market, even into the early stages of the bull. It has not got back up to this capitulation level, which was coincident with June of last year. It has not been able to do it. Of this year, what am I talking about? Of this year. And for us, Bitcoin put in its low. When did Bitcoin put in its low? Let's just check that and largely effectively be a turner. Let's just check. Again, Bitcoin USD. It is. That is November of 22. The final low. November 22. If we go back to our friend ADA, December, November 22, November 28. You can see that was the Bitcoin low. What has ADA done? At that point, ADA was here on dominance, 1.41%. Where is it today? 0.97. I've consistently said ADA is not looking right already, and it's going to shed and lose dominance. It has not performed well throughout this last period for a year, guys. So 1 year, we're November 23, that's November 22. Since the bottom of Bitcoin, our continual statement that ADA is relatively due to underperform and is not a preference has been, again, a good call. Because from there, you can see 1.4, you could argue even not far off 1.45, all the way down. And in actual fact, you hit a low here. What was your absolute low on dominance? It was 0.77, literally a half. You've never got above that 1.44, and even now where you are, where you've stopped going down, you are below 1%. You are below 1%. You've lost at least a third by not being in something that was neutral in dominance and retains the same dominance since Bitcoin bottomed. Never mind in Bitcoin itself, that's now gone up in dominance since our breakout box discussion. So the dominance technical analysis, many people don't realize how powerful that is. Look here, this is an important point. You must understand this. It's relative strength assessment. Be in the ones that will perform better over the medium long term. We have continued to say ADA is going to shed value, and I'm talking over the last year. I'm not talking today. In fact, today it might even start eventually some sort of basing process, but it's still not there yet. Whilst other tokens that we have suggested have been stronger, including Ethereum, Bitcoin, and even XRP that's lost recently, held better since November. So, and our mystery token has actually been unbelievably strong. Not running right now, but unbelievably strong. It's just continually gained an upward drift in dominance. And you can find out what that token is. Click on the link below. Currently underperforming, last week or two since Bitcoin's move up, but generally far stronger. And actually its bear market ended and it didn't run a new low on a lot sooner than anybody else. Anyway, we'll talk more to you on that. That's it from the Crypto Sniper. I hope you've enjoyed the video. Quite a lot to take in. So let's summarize. What's going to happen? Bitcoin has a technical target for 145k and 3 fat Chinese ladies. It also, Ethereum has an overperformance to gold and the euro and is in excellent HVF state for upside, and we gave you the target for euro target, which of course is around 9-10% more than dollars, of around, I think, just under 300 on the euros. Go back to that point in the video if you want the exact number. And don't forget, it will go beyond that potentially. What else did we say? XRP is actually not to be sold off at these levels. The spikeamental HVF structure means you get a fair amount of drift in between surges, but that a major surge could come and you'll be the dog with a bone that lets it go just before it happens. It's like, oh, I can't give up, only to watch it really pump, and then you'll be chasing in higher up and it'll hurt. So it remains on tune despite all recent relative underperformances, and in fact that underperformance analysis is bringing it to a very critical level where it's about to probably get its surge. So keep that one in mind as well. We also spoke about ADA, which we've just finished summarizing. There is a turn coming for ADA, but at the moment it has been an underperformer, and we'll have to wait and see what turning structure it finally gives us on the dominant side of charts. We've made the case for dominance analysis that you're not doing, that we do in the community. We've made the case for cross-market analysis against multiple currencies that actually have given you great quality HVS, which didn't exist on the dollar. We've made the case for valuation of current cryptos against gold as well, and to see where those are and why upside will be coming. So generally pretty bullish for Ethereum, pretty bullish for Bitcoin that continues to show dominance, and I think we'll see the 47.5 that could then set up that future 145k. At that juncture where it breaks for that and is moving fast, then I would expect the higher beta other stocks such as XRP and the others to then be overperforming and clawing back some of the dominance that they've shed during this period. Thank you for watching. If this has been valuable to you, hit the like and the share. We need the support to be relatively better perceived than the other channels that are not telling you that. If you don't hit the like, you see us less often, we get less credit, we don't get put in the algorithm, we talk too many dangerous words, wrong speak, and as a result we will fade as a fading light. If you want us to shine and illuminate the world on this beautiful Cape Town sunny day, in all of the planet, even those in the grim grey northern hemisphere, then you must engage us. Do you want to see that fashion picture one more time? There it is. That's what I'm talking about. That's my northern hemisphere buddies. Come and join us in Cape Town. You no longer have to look like the Michelin man, and God help you if you need a pee quickly. That is apparently serious fashion. Don't forget to follow on the Market Sniper and the Crypto Sniper. Thanks for watching. Catching you later. Bye.